All right, today some more economic examination of the ever-expanding space sector. So we're going to focus today on two companies. Of course, we're going to have SpaceX, as they seem to always be in the news, but then also Rocket Lab. So we're watching in real time the space economy evolving from a domain primarily associated with speculation into a substantial hundreds of billions of dollars industry. Probably going to surpass $1 trillion next decade or so. So today we're going to concentrate on the economic approaches, the competitive strengths, and the financial implications that are going to be presented by these two very innovative companies as they themselves are navigating this transformative landscape. So, from an economic vantage point, the sheer scale and projected expansion of the space economy are things we always take note of. The market growth, again, over the next, at least within 2 decades probably, the $1 trillion mark. Now, this growth has not been evenly distributed. Instead, it's been concentrated in specific areas. We've seen this evidenced by the strategies used by these particular companies, SpaceX and Rocket Lab. The move towards launch vehicles that can be reused, and the proliferation of satellite-based services. These things are fundamentally altering the cost structures and the accessibility of these markets. So these are establishing new economic models. So let's start with SpaceX. So here we are, 2025. This has become a crucial element to the global space economy. Their economic leadership is founded on two main components: the Starlink satellite internet infrastructure and the reusable rocket technology of Falcon 9. So we know from before that Starlink is a significant revenue generator. We've talked about that before on this channel, bringing in almost $12 billion in this year alone, more than 7 million subscribers. So they have 90% share of the satellite internet market. And they have this strong position. And it's not just about the number of subscribers. It also shows the economic efficiency of its second generation satellites. So this is allowing for rapid scaling and superior performance compared to the traditional geostationary satellite providers. And we have strategic collaborators, such as the direct-to-cell service agreement they have with T-Mobile. Those things just further enhance the revenue streams and their penetration of the market. We talked about the Falcon 9 rocket last week and how it's been able to reduce the cost of payloads and get that, what was it called? A flywheel model or something like that. The economic cycle of continuous improvement, so that the more economical the launches become, it will help support the development of advanced spacecraft, things like the Starship, as well as Starlink's expansion itself. So in quarter 2 of 25, this pace was evident, and SpaceX was conducting 45 Falcon 9 missions, launching 910 satellites, and they had 90% of the global payload mass launched this year. So their revenue practically doubled, 8 billion to 15 billion. Starlink was about 60% of that. So it's at a $400 billion valuation as of this summer. So that's almost 26 times revenue multiple. So there's lots of high expectations for them in the market. And this whole internal funding model of research and development gives them a pretty crucial economic benefit. But from that economic risk perspective, the Starship program requires substantial capital investment. So Elon has said himself concerning the financial intensity of advanced aerospace development, the possibility of financial distress if flight frequency targets are not met could really highlight this particular challenge. Then there's also regulatory obstacles, things like prohibitions in major markets like India and China, and competition from rivals like Amazon's project and OneWeb. They present tangible economic threats. So next, let's look at Rocket Lab. So this company is showing rapid growth, as well as being able to strategically adapt within this evolving space economy. Now, Rocket Lab redefined the economics of launching small satellites. Now they're strategically shifting their focus to capture the medium lift market with what they call the neutron rocket. So this strategic adjustment is reflected in the over 500% increase in their market capitalization over the past year. Rocket Lab's Q2 financial results show that it's accelerating their progress. Revenue, $144 million, 36% year-over-year increase. Both their launch services and their space systems contributed significantly. The company's GAAP gross margin expanded to 32%. So the company has not yet achieved profitability. So they're showing a $66 million net loss in Q2. This is mostly due to the substantial research and development, as well as infrastructure investments that they have to do in order to scale the Neutron rocket program. But the Neutron rocket is central to Rocket Lab's strategy for growth, because their intent here is to directly compete with SpaceX in that medium lift sector. Some analysts are estimating that 5 to 7 Neutron launches in 2026 could elevate their annual revenue beyond $700 million. And Neutron's advanced carbon composite design, their reusable architecture, are engineered to lower the costs per launch. So they are emulating the economic efficiencies that were first established by SpaceX. SpaceX kind of gave them the proof of concept, and they were able to then invest into that as well. Sort of a second mover type of advantage. Now, beyond the launch services, Rocket Lab's economic strategy also includes diversification by creating strategic alliances and expanding into defense. So they have secured a multi-launch agreement for the Neutron with a commercial satellite constellation operator. And as a subcontractor in Kratos Defense's $1.45 billion hypersonic test program and the $275 million acquisition of, I think it's pronounced GEOST, G-E-O-S-T, a company that specializes in electro-optical sensors for defense. That underscores its expansion into the high-value defense operations and space domain awareness that they're going to have. So government contracts also provide support, with Rocket Lab participating in the U.S. Space Force's National Security Space Launch Program, which was $5.6 billion, and the Neutron is designated as a launch vehicle. They also got about $24 million award under the CHIPS and Science Act, so that supports its role in domestic semiconductor production for some space systems. So when we compare these two companies, we can see that they're distinct yet complementary in their economic approaches. SpaceX has clearly achieved market dominance with their extensive ability to scale, their aggressive cost reduction via the reusability, as well as their vertical integration. So launch services help fund Starlink and vice versa. So the quintessential high-growth sort of enterprise. Rocket Lab's investment in Neutron shows a direct economic maneuver to secure a larger portion of this expanding space market. As the pie is growing, they want to eat more of it. Getting beyond its initial small satellite focus. Ultimately, both these companies are going to be pivotal in the broader accessibility of space and the next frontier of global connectivity. SpaceX, having established its leadership and internal funding models, represents an investment with potentially high rewards, but also significant risks. Again, no investment advice from us. We're just looking at the economics of space. Rocket Lab has this sort of compelling long-term opportunity, depending on market fluctuations. They have the strategic diversification plan and the ability to execute its Neutron project. Could capture a notable share of the projected $1 trillion space economy. So the economic space of space, it's a better way to say it, the economic landscape of space is dynamic, and these two companies will undoubtedly continue to have significant influence in its development.